Hello traders, it's 8:01 a.m. Chicago time on Tuesday, the 25th of June, 2019. This is episode number 1543 of our Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. So this morning, the market stance is again somewhat mixed and slightly to the weak side. Actually, allocation, we see stronger allocation to safety. Uh, Gold key is still on a tear, trading at $1,430, up 11, little under $12 actually, up 0.9%. Crude oil follows suit at 58.16. Crude is in a consolidation pattern. Looks like a bull flag, up 20 cents or 0.35%. The bonds are up 8 ticks and the Bund is up 25 ticks. So overall, the allocation looks like it is to safety today. The laggards this morning, the cable, the euro, the Nasdaq is down just 5 points. The Russell's down half a point, and the S&P is actually unchanged at the moment. The overnight session has had some interesting moves in it, somewhat validating the stuff we talk about here, volume profiling and all that. So that's where we are in terms of what's expected for today. There are quite a few releases today. Nothing that is high tier, except that Fed Chair Powell is expected to speak at 1 p.m. Eastern. And I'm not aware of whether or not there will be a release, a script that he will read off of, or what. But mark your calendar for today. That Fed's Chair Powell is speaking at 1 p.m. Eastern. What does this mean? It's relatively significant in that he's politics. POTUS, President Trump has been bringing the Fed chair into politics. POTUS obviously wants interest rates to be dropped so that the economy can look, the markets can respond and so on. It's an election year. Next year, the re-election campaign has already started. So bringing the Fed into politics is not a new thing, but publicly stating that he is inept or the Fed doesn't know what it's doing is unusual. So just pay attention there. We'd be very interested to hear what he has to say. At 10 a.m. Eastern, we've got new home sales. Fed's Bostic at noon Eastern, ECB's Kerr speech at 1:15, and then we get API crude oil change at 4:30 Eastern and Fed's Bullard at 6:30 p.m. Eastern, and that's what's on deck for today. Okay, let's take a look at what we expected yesterday versus what we got. The primary expectation yesterday, given the stance that we had been left with on Friday, the primary expectation is for a pop into the 61 area and then for the market to roll over and rotate down to 46.50, only to hold sideways. And so we're looking at scenario one. Scenario two is the expectation that it may not have enough energy from the buyers to get it up to 61. And so the expectation is for an open auction that rotates down and out of range, down into 46 for a pop later in the afternoon and a hold sideways into the close. Scenario one played out almost perfectly. Here is scenario one. Let's expand the range. What is going on here? This isn't operating properly. Here's scenario one, a push, an open auction with a push to 60, and then it dropped down and it could not get 46. By the way, yesterday The S&P couldn't even get the overnight high or the overnight low on that 98% historical probability stat for the overnight. I've demonstrated this stat several times on several webinars, and it's an indication of how sluggish the market was yesterday. But overall, we didn't get to 61, so we never tagged the overnight high, which was 61 quarter, and we never got to 46 to take out the overnight low. But overall, the scenario played out almost perfectly. Only saw one opportunity for a structured trade actually yesterday. Again, it traded like we're in the middle of summer, although the weather here in Chicago hasn't been an indicative that it's summer yet, but it definitely traded like it was summer. So that was yesterday. Let's take a look at what we saw overnight. Actually, a couple of features of the profile yesterday, or the session yesterday. We breached the IB high, and then we breached the IB low, which gives us another neutral day. So we had a neutral day here, breach, breach. We had a neutral day here, breach, breach, and then a neutral day there. So overall, neutral down, neutral down. This was neutral up last week on Thursday, which ultimately pushed us into all-time highs. But now we've got neutral down with a lower high, lower low. This could be the start of of one-time framing down and a rotation back to the 29-22-ish area. This is what it's looking like. 29.22 would be the big target down below, and other targets down below. Let's take a look. Excuse me. Yeah, 29.22 is the MC point of control in this region. Also, the 29.22 is the scene of the crime from Fed Day, so that's a pretty attractive area initially for a target to the short side. So with that being said, also the profile had a weak high, had a weakish low, just a very, very choppy and sluggish session. So that's part of the narrative, what we did yesterday versus what we expected, which colors for us a little bit, which colors for us a little bit to what we are likely to get today. The overnight session opened up and it pushed into the point of control, this pretty heavy point of control from yesterday to the tick, basically. And then sellers came in. This was during the Asian session. Sellers came in to take us out below the prior day's low. And then it stabilized and it's starting to move up, and it just breached the mid. However, the profile overnight is a B-shaped profile with a point of control below the prior day's low, and the mid, which was around 50 and a quarter, has been holding until just now. Tests of 49.50, 49.50, 49.50 gives us three tops. There's a triple top right here, and as many of you probably disagree, triple tops do not mean strong resistance. They mean a weak high, at least for me. They mean a weak high, a high that keeps retested as a high that is not showing excess, which means that it's likely to be taken out, and it was taken out by these bars here. It's hard to see against this background, but they were taken out. So that's where we are, but we do have a B-shaped profile, which can indicate that there's some long liquidation and weakness on the buy side, with sellers dominating and finding consensus a little bit lower, shifting the value area a little lower. So that's what we've got in the overnight session. Now to move on to what we're expecting for today. Here we go. So for today, come on. Given the stance that we have coming in, seeing some really important resistance up at 58. We're opening in range out of value of yesterday. And so the expectation is for an open auction that reverts back. I'm expecting the market to respond this morning, to respond before it starts to sell off. And I'm looking for a ride down into 29.4175 or so before a bounce. The rotation down is not likely to be a strong selling trend. It is likely to be a grind. So I'm abbreviating this. This could be just an all-day affair just to get down into 41, 42 as the primary scenario. I'm following the trend lower high, lower low, lower high, lower low, lower high, lower low. The catch here is whenever the catch here is whenever The catch here is whenever Powell speaks, we may see a little fluctuation and some movement there, depending on how he positions himself. So I'd highly recommend you listen carefully to your news feed at that time. The secondary scenario is an open auction that immediately starts to skew down, but given the action over the last couple of days and no test up, I'm expecting this to balance and come back into the range. Come back into the range for another lower high, lower low, but in either case, I'm looking for this to skew lower. Now, here's the surprise scenario. The surprise scenario is scenario 3, in which the market dips down, pushes lower right off the open, finds buyers, and becomes impulsive up and drives past this 2960 to start moving towards the all-time high. There's a big ledge up here at 66, 67, and that would be the expected test area if we get buyers coming in. Remember, the market moves down to advertise for buyers, it moves up to advertise for sellers, and we may see this where ultimately, and I'll give you an overview of why I'm expecting this third scenario. 3 neutral days in a row, low probability stat historically, and generally there's a breakout that occurs off of it. And the reason I'm thinking it's scenario 3 being the buy side is, now I'm going to move away from these scenarios and show you the composite so you can see what's occurring, so you can keep the big picture in mind, right? So we don't want to get caught up in our small time frame as day traders and forget the higher powers at play. Look at this. Look at this. Look at this setup. I mean, you have a market that has run up quite a bit, and We've had a really strong rally. We had a consolidation, and then we're having another strong rally, and we're having another consolidation. This may be a bull flag forming again. Don't forget to look at the big picture, and this is not indicating that sellers are winning at all. So it might rotate down a little bit, but overall, we're looking at somewhat of a bull flag that's potentially forming here, just like we saw back here before the next break higher, right? So that's why I'm expecting, if anything, if it does push, I'm expecting scenario 3 to be an open test drive up. The range has been falling off, volume has been falling off, despite the rollover, and the delta has not been falling off. Look at how strong that delta is from the low here. The delta continues higher and higher and higher, despite the fact that the market is just sitting sideways. There's some accumulation potentially going on here, accumulation hedging to the buy side or whatever. It's indicating that the market's expecting higher prices, in my opinion. So that's that. The last thing I want to do is share with you the order flow and how things look on CT Bookmap. Here's here's what yesterday looked like back here. So we open up on Sunday night, and you could see that the market really outlined some areas that we pushed up against, but overall it seemed like algo tracking day, sausage fest, kind of a good day for brokers, really. Although the volume wasn't there. Yesterday's volume, by the way, was 700,000 contracts in a day session, very, very low, and it's not really something to um, to like really for anybody. But overall, you could see that the liquidity is just not. It's we have some pretty solid liquidity down at 29.40, 29.31, and 29.30 as well as 26. We don't see it at 22, the big target down below, 22.75. We don't see any liquidity there. Up top, we see liquidity at 65 and a half, 63, 65 and a half, 69, and 74. And currently we're pushing up against some liquidity that's been here since the European Open. We're pushing up against that, which is also the VWAP for the session. Really, the full session VWAP's 29.55 right now. So overall, the market is showing that it could go either way in terms of order flow. Okay. Good luck, and I'll catch you tomorrow morning. Take care.